Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. This video is being filmed on Monday night for trading Tuesday, February 23rd, 2010. Traders, this is our 551st video, baby. They're just going to keep coming. All right. What do we got for you tonight? This evening, Monday evening, we are looking at the indices are still above and smartly above OTAPMA, or the Omni Trading Academy's proprietary moving average, and the transportation average, the leader of the U.S. indices, is leading the way. It looks very strong above OTAPMA, and I have a chart I'd like to show you on that. Another very important thing I've noticed here, traders, and wait until you see this. It appears to me that there is a topping pattern in the bond market. The U.S. bonds, the 30-year T-bonds, it looks very, very similar to the same pattern that we noticed back in 2007 at the top of the S&P. Well, now, doing my homework, day after day, I'm noticing almost the exact same broadened topping pattern in the bond market. So I'll show you those charts, and I think you'll see what I mean, traders. For you video fans who've been with me since a couple of years ago, you'll recall that I started yelling about the top in 07, early 07, and I was saying, wow, it looks like something's going on here. And by the time we hit the end of 07, beginning of 08, it looked like the top was finally in. And we started doing video after video and holding up bottles of Head and Shoulders and saying the market's got dandruff, watch out for the downside, blah, blah, blah. And no one really believed me. But that topping pattern worked and the markets got canned. Well, now, once again, as I just mentioned, I see a very similar pattern in the bond market, and I will show that to you. Traders, I'm going to try to make this a quick video because I want to do some more analysis and get out of here. So with no further ado, let's go look at some charts. Okay, traders, the first chart you're looking at this evening is the leader of the U.S. indices. It is the Dow Jones Transportation Average, and this is a daily bar chart. Right off the bat, simple enough to see. As you can see, from the March 07 lows, from the March 09 lows, we had a big rally, came down, rallied out of that, came down, rallied out of that, and went back up again, right? Came down, went back up. But here's the thing. It's a series of higher lows. There's this low. The next low is up here. The next low is up here. So it's continuing its bullish pattern. The last time it got below OTAPMA, it went right back up. And this time when it got below OTAPMA, it came right back up. Last time once we came up back above OTAPMA, we had a pretty big rally. Now we are above that resistance line. We're sitting right here as of Monday's close in the transportation average. That looks pretty good to me so far, traders. I like what I see. Slightly worrisome is that if you look at the indicators in the transportation average, they're pointing straight up, technical indicators. But then if you pull technical indicators for the DAX and the FTSE and the NASDAQ and the S&P and the Dow Jones Industrials and other indices, they are mixed. Some are pointing up, some are pointing down, some are pointing sideways. So I think we need to sidestep the market for the first few hours of this trading session. Let the market tell us if it's going to be another buy again today or if it sets up for a sell, and then we'll jump in. I'm thinking it'll set up for a buy, but I'm looking for just about anything because indicators are quite mixed. I can only find one chart, this one, the transportation average, that actually has all bullish indicators. But it is the leader, which makes me comfortable that it could still go higher. But again, the other indices, including world indices, have very, very mixed technical indicators. That is prompting us to stand aside for the first few hours in the S&P market for the Tuesday trading session and see what happens. We'll play it 1 minute at a time. All right, traders, the next chart is of the Emini Russell, the Russell 2000, and I think you'll like what you see there. Okay, traders, the next chart you are looking at is the Russell 2000, as mentioned. And once again, just like you see in the transportation average, a low, a higher low, another higher low, the next one should be higher than that, and so on and so forth. You got below the Omni average, came right out, got below the Omni average, came right out, got below the Omni average, came right out on each one of those dips. Looks to me like it should continue. Once again, however, like I showed you in last night's video, or I should say the weekend webinar video, this could morph into a big head and shoulders right here. It's not at the moment, and I'm not going to call it one, but if we come back down and stay here for a while, then it will be one, and then we'll deal with it. We'll see. We'll take that one day at a time, but I like what I see. I think we're above major resistance levels. I like the way we bounced above OTAPMA. I like the fact that we have higher lows, and I think that this market should continue higher, even if there is a couple of day pullback in the next few days. Overall, that looks like a strong picture to me. All right, traders, the next thing I want to show you is a very, very interesting chart, so let's take a look. Okay, traders, this is the US T-bonds, the 30-year T-bonds. It's the March contract, and it's a daily bar. What you will find here is what I am considering or calling a topping pattern. Head and shoulders, another head and shoulders, an inverted head and shoulders. If you look hard enough, there's a little teeny head and shoulders right here in the right shoulder. And if you really want to exaggerate, there's another one right here. So there are head and shoulders, multiple head and shoulders, uprights and inverted, plus little head and shoulders within the right and left shoulders of each bigger head and shoulders. That, traders, usually means multiple head and shoulders formations usually create market tops. We had the first head and shoulders. The market ran up and failed at this head test. Broke down but morphed into a second head and shoulders. Broke all the way down and morphed into an inverted head and shoulders with a head and shoulders inside this right shoulder, a head and shoulders inside this right shoulder, and we could probably dig one more out of here if we pressed hard enough. So what I'm showing you is that is a rounded looking top with multiple head and shoulders in it. This is exactly how I called the top in the S&P on video weeks and weeks before we got there back in 07. And in a moment, I'm going to show you the very same chart I used to call the top of the S&P in my videos, and you'll see it looks very much like this, even more head and shoulders in that topping pattern. Let me show you what I'm talking about, traders. Let's go to the next chart. Okay, traders, this is the very same chart that I used back in 07 through 08. This is how we called the top here at the Omni Trading Academy. We showed you inverted head and shoulders, another head and shoulders, another head and shoulders, another head and shoulders, an inverted head and shoulders, and the whole thing was a big head and shoulders, rounded looking top, very much like I'm showing you in bonds right now, traders. This is exactly how we made this high. We predicted this high back in July of this year. We predicted that we would hit 1577. We got there. In fact, I think our prediction was for 1576. We made it to 1577 right there, and it topped. And how I knew is what I'm showing you right now. This blue shoulder, the big head, the big shoulder, one big head and shoulders. An inverted head and shoulders in the left shoulder, an upright head and shoulders, which morphs into a second upright head and shoulders in the head. Then we make a right shoulder, and you have a head and shoulders and an upright head and shoulders, which then turned into an inverted head and shoulders. But the idea behind this is head and shoulders, multiple head and shoulders gathering together usually tell you a market is topping out. We call the highs in the S&P market. We are now showing you the bond chart. And in that bond chart, this is what's going on right now. Traders, I have no idea because I don't own a crystal ball, and I certainly don't get to talk to God too often. So I have no idea if the bonds will top like the S&P did. But as an analyst, I'm certainly going to expect it now that I see the bonds have the very same pattern that the S&P had back in 2007. Traders, do your own homework, pull your own charts, compare this look to what bonds look like right now in today's market, and I believe you will see that they are very, very similar. So, traders, you see those charts? You see that topping pattern? That is how we called the top in S&P, and that is what I'm starting to see now in the bonds. If the bonds continue in this fashion, we're going to get cracked really hard. Traders, don't forget, you see a big topping pattern building for a few weeks to a few months, and then the Fed comes out and raises the discount rate last week. Isn't that fundamentals coming out in the charts first? I think it is, because if the Fed raises rates, bonds have no choice but to go down. If this is the beginning of the Fed raising rates, it's the top in the bond market. The analysis told us it was coming, and now, boom, the fundamental comes out in the charts. It always comes out in the charts first. In fact, if you ask me, charts are merely a visual look at, I guess, fundamental data and traders' reactions to such. Because that's really all charts are. It's price action. Everyone trades based on the fundamental data that comes out. So charts are merely a visual look at what all of us are thinking and reacting to once the fundamentals come out. And I say fundamentals always come out in the charts first. So that topping pattern tells me the Fed will continue raising rates through this year into next year. Let's see what happens. Let's see if it's a top. It was a top in S&P. Why shouldn't it be a top in bonds? Same sort of pattern. All right, traders, so you've seen that. You also seen the Dow Jones Transportation Average. The leader is certainly above my OTAPMA and looking strong. So let's do a little sidestep for a few hours tonight into tomorrow and let the S&P fill in some spaces. You know, hitting a few key Omni levels is actually what I want to see before I get in. So that's what I'm waiting for. If the S&P tests some good Omni levels, I'm jumping in. Otherwise, I'm going to try to sell bonds and we'll see what happens. All right, traders, I told you it's going to be a quick video. I want to get out of here, so I'm going to end this now. Don't forget, a stop is your best friend. Never trade without stops. Traders, I've heard horror story after horror story from traders who think they can get into a market and not place a stop. It takes a split second for bad news to come out and your account to get wiped out. Place your stops. Place them first. Never, ever trade without stops. All right, traders, give me a call time day or night, 702-629-4755. And, of course, come on down to our site and join us in our free chat room. You can reach us at www.livewithoscar.com. Type it up, jump in the chat rooms, and let's see what's going to happen. All right, traders, I'm going to go. Keep your emotions out of trading at all times. And one of the best exercises I can think of for you is to tell you to say this to yourselves every morning, every afternoon, every evening. And you know what that is? Stops are in. Emotions are out. Futures trading is risky and can cause substantial financial loss.